Ladies and gentlemen, good day and welcome to the Q4 FY23 earnings conference call of Repco Home Finance hosted by Yes Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference has been recorded. I now hand the conference over to Mr. Rajiv Mehta from Yes Securities. Thank you and over to you, sir.
Yeah, thank you, Jacob. Good evening all. Welcome to Q4 FY23 earnings call of Repco Home Finance. We thank the management for giving us this opportunity. We have the entire top management team, Mr. K. Swaminathan, Managing Director, Mr. T. Karnakaran, Chief Operating Officer, Mr. N. Balasubramanian, Chief Development Officer, Ms. Poonam Sen, Chief General Manager, and Ms. K. Lakshmi, Chief Financial Officer. Now, I would like to hand over the call to Mr. Swaminathan for his opening remarks on performance of the company and the outlook. Post this, we'll open the forum for questions. Over to you, Mr. Swaminathan.
Oh, thanks, Mr. Rajiv. Thanks, Jacob. On behalf of the entire management of Repco Home Finance, I welcome you all to the earnings call of RHFL for the quarter and the year ended March 31, 2023. We would like to thank you all once again for joining us in this call. Recalling the priorities of the financial year 22-23 of bringing stability in business and asset quality to be under control, we are extremely happy to announce that we have continued the momentum of the previous quarters in the last quarter of the year 22-23 and successfully closed the financial year. We have also been able to initiate the introduction of a new system and business processes and wish to take advantage of the same in the current year. Some of the major steps that have been taken by the management in FY22-23 were bringing a culture of target-oriented approach in sanctions, disbursements, NPA control, etc. Simplification of underwriting processes, including decentralization of powers, implementation of a new software, improving the employee morale, controlling BT outs. I'll go to the business updates. Despite the expected initial glitches of the new IT platform during mid-quarter, we were able to achieve disbursements of 835 crores in the fourth quarter, as against 601 crores of Q4 FY22 and 696 crores of Q3 FY23. This is the highest disbursement the company has made in a quarter in the recent past. Our AUM stands at rupees 12,449 crores, which increased by around 2% in this quarter from the previous quarter of 12,196 crores and 6% from 11,759 crores in FY22. This growth is despite bulk receipt of subsidy from government of rupees 84 crores in 22-23 and 51 crores in the current quarter, last quarter. Loan sanctioned increased 30% QOQ to 966 crores from 745 crores in Q3 and about 72% increase annually to 3,232 crores as compared to 1,880 crores in FY22. The ratio between exposure between self-employed and salaried segment stood at 51.6% and 48.4% respectively. The share to non-housing loan, that is home equity, stood about 20.7% of loan book, of which housing loan sanctioned contributed to about 79.3% of the book. The quality of our NPAs, despite 700 plus crores of restructured portfolio hitting us during the year, we were able to reduce the GNPA to 719 crores at 5.8% GNPA percentage and net NPA at 362 crores with a percentage of 3%. We have a total provision of 519 crores with the provision coverage ratio of 50% for stage 3 assets alone. Profitability. Our NIM for Q4 was at 5.1%. NIM for the year as a whole was at 4.8% for FY23 compared to 5% for FY22. We have been able to maintain a spread of 3.3% above our guided numbers of 3% by passing on the interest costs despite intense competition. We will continue to monitor the movement in our cost of borrowings and strive to pass the change to our customers as well as having a quick control on our other costs. Our average yield on incremental loans sanctioned rose to 10.7% in FY23 as compared to 10% in FY22. The profits grew 2% sequentially to 82.1 crores during the quarter, driven by stable margin, and we earned ROA of 2.7% in Q4 FY23, same as in Q3, and ROE of 14.4% as against 15.2 in the previous quarter. Our annual ROA and ROE stood at 2.5% and 13.5% respectively, as against 1.6% and 9.6% achieved in FY22. New software. We have started implementing a new software in phases. The phase 1 has gone live from February 23. The loan origination module is fully stabilized, and once the teething issues are addressed, the loan management, loan collection, and EDL modules also will be on par by the end of this quarter. There are value addition products as well, which we plan to roll out during the course of this year. Our distribution network was 192, comprising of 159 branches and 33 satellite centers, with additional 2 asset recovery branches. I will summarize the key financial highlights for the year ended March 23 before opening the floor. The loan book stood at 12,449 crores, registering about 6% year-on-year growth. PAT for the year surged 55% to 296 crores. ROA and ROE stood at 2.5% and 13.5% respectively. The core profitability has remained strong with a solid spread and margin of 3.3 and 4.8% respectively. The gross NPA stood at 5.8% with a coverage of 50% and net NPA at 3%. Way forward, for the next year, we plan to grow sanctions and disbursements by 20% and achieve an AUM growth of 12% on a conservative basis. The GNPA numbers are planned to be brought down by at least 100 crores during 23-24. I once again thank Mr. Rajiv and his team, and I leave the floor open for any questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aniket from BMSPL Capital. Please go ahead.
Yeah, good afternoon. Am I audible?
Yes.
Yeah, thanks so much for the opportunity. So I had a couple of questions regarding the NIMs. So can you just give a color on what do you feel are the sustainable NIMs that we can expect in FY24, given that, rates may have peaked? And can you give some sort of guidance over the next couple of quarters or over the next year for NIMs?
Okay. Any other question?
Yeah, so the second question is, if NIMs are peaking, then what will be the main catalyst for profitability in the coming financial year? And how are we looking at the loan growth and asset quality going into FY24 as well?
Okay. For the second question, I think I have already answered in the presentation, in the initial remarks. See, we plan to grow around 12% as far as book is concerned. Okay. So, and 20% growth in both the disbursements and sanctions in the current year. This is our broad expectations. We hope that we will be able to do this as we have already done some good momentum in the year passed by, that is 2022-23. As far as NIM, we are confident that we will be able to maintain. In fact, we have passed on all the cost increases more or less to the ultimate end customers. One more thing which I would like to point out, we have also changed the method of passing on the periodicity of reset of our interest rates. Earlier, we used to have interest rate reset of every half year. Now, from April 23 onwards, now we have decided that such resets will happen every quarter, that is April, July and all. So this also will help us maintain the NIM that we have already projected. We plan to have at least 4.8% in the coming year as well.
Okay. Thanks for that. And just a final question, if I can put in place. Can you just give me the number for the slippages for Q4 FY23 versus the Q4 FY22?
Okay, I don't have immediately, but I'll give you. Okay, give me some time, I'll give the number.
Okay, sure. Yeah. Thank you and all the best.
Thank you.
Thank you. A reminder to all participants, to ask a question, you may press star and 1. The next question is from the line of Aviral Jain from Singular Gulf. Please go ahead.
Yeah. Good afternoon, sir. Can you please talk about what has been the repayment rates and the competitive intensity? Last 2-3 years, what we've observed is there were large number of BT outs, and even in your opening remarks, you had mentioned that BT outs, you're trying to contain the BT outs. So how does this balance going forward as that you see maintaining BT outs versus maintaining yields and also high disbursements and growing AUM?
Okay. See, the BT outs have been one of the reasons why we could not grow in the last 2 years. Okay, we have been able to contain to a large extent. See, last year, the whole of last year, the total BT outs were 367 crores. But we should also see that we have also got a BT in of around 270 crores. So this BT outs have been more or less matched by our BT. This is one. Second one, the BT outs are also being controlled by our repeated touch with the products from CIBIL, whereby we are able to advise the branches about the likelihood of a particular customer going out of our fold. So our branches are able to talk to the customer, meet their requirement. Maybe if they want some interest reduction or something, if it matches our expectation, then we were able to do that. Because of such things, we were able to contain BT outs to a large extent, especially in the last 2 quarters.
And so the falling book, I mean, if I were to look at the opening book plus disbursements minus your closing book, BT out is not a big portion, but regular amortization of loans has caused the loan book to grow only by 4%, whereas your disbursement has grown by almost 25% as a percentage of your opening book for the year.
Yeah, Viral. See, this cannot be avoided. See, this company is now 23 years old. So naturally, the normal repayments also normal repayments also going up year after year. This cannot be avoided. But what we can do is to match this, we need to increase our disbursement so that this is overshadowed. That is what we are planning. And month after month, we are seeing that the increased disbursements vis-a-vis the previous month or previous quarter are always on the higher side, so that we are able to match the AUMs. And we are sure that in 2023-24, this AUM growth will be more than offset by the likelihood of repayment, normal repayments or some prepayments. Some prepayments also cannot be avoided. So with all this, we are confident that we will be able to increase our AUM.
And so this is very heartening to hear about the BT in. You mentioned some 200 crores of BT in that your team has been able to garner. Is there a separate product? How is that being achieved? And if you can give us some understanding of, are these high yield loans from some of the NBFCs or housing finance companies which are chasing high yield housing loans, or where are you getting in from? And could this be a bigger number? Could you make a bigger play, because some of the higher yield housing finance companies are also reporting very, very strong asset performance. So there would be a lot of seasoned loans which they would have given out 2-3 years back, which could be changed. I wanted to understand how is this being achieved, and it's a tremendous achievement on part of your team on this regard.
Okay, thank you, Viral. See, the point is, one, our interest rates are really competitive compared to this in the industry. And sometimes during the course of last year, we found that our interest rates are one of the cheapest. So this is one of the main reasons why people are coming from maybe a slightly high-priced NBFCs to our fold. This is one main reason. We also have a product whereby a customer with a better credit score, we will be able to offer a cheaper interest rate vis-a-vis that in the industry. For these reasons, we are seeing a good amount of BT-ins in the last 2 quarters.
And is there a focused team who is only focusing on BT-ins, and how do you see that going forward?
the fact is we don't have a specific team. We have a sales team, but we are telling our field saying that this is one opportunity we should not lose. So our people are being able to take care, and whenever such customers are there, we are able to get the momentum.
Okay. And one last again, would you expect the strength to continue and increase going forward, the BT?
Definite, because our price is slightly competitive compared to the many of the players in the housing finance industry. So this is the main reason of this BTNs coming. We will try to maintain the same competitive pricing so that going forward too, we will have a similar drive towards us.
Okay. And sir, as you mentioned, the interest rates are amongst the lowest in the industry. So who do we see as immediate competition from a segmental perspective? Because is it more a Canton Home, which is very, very going after prime borrowers and not so much like an Aptus or some of the other affordable housing finance players?
I don't want to name any specific corporate in this particular call, but in housing finance industry, I think you know very well, there are players who are giving the cheapest, and there are also players who are costlier. So we are somewhere in between. So definitely customers who have got a track record in other housing finance companies, they are ready to switch over to us. The same way as some of our corporates or some of our customers are going to others. So our pricing becomes attractive for those customers who are being priced on a higher scale in some of the HFCs.
Okay. And going forward,
Mr. Jain, may we request that you return to the question queue for any follow-up question?
Yeah, thank you.
Thank you. The next question is from the line of Renish from ICICI Securities. Please go ahead.
Yeah, hi sir. Congrats on a good set of numbers. So just two questions from my side again on the growth side. So does our 12% AUM assumption would require any investment in branches? I mean, we have not yet sort of opening branches in last 2 years. So with this assumption of 20% disbursement growth and 12% AUM growth, does it require any aggressive branch expansion, or do you feel that the current branches are capable enough to drive this growth?
Yeah, Renish, this year, that is 23-24, we plan to open some 10 branches.
Okay.
10 satellite centers. Okay. This is excluding some of the existing satellite centers. We have around 33 satellite centers now. Some of the existing satellite centers would get upgraded to a branch. When they reach a critical level, we upgrade them to a branch. So excluding such upgradation, we plan to open some 10 branches and 10 new satellite centers. These, any disbursements in these new branches and the satellite centers will directly lead to an increasing AUM.
Hello?
Yeah.
Okay. Yeah, yes, sir. So second, on the credit cost side, so this quarter credit cost has been, still lower. So on a steady state basis in 24, considering our coverage ratio is already at 50%, and if asset quality remains or the fresh slippages were to remain at the current level, what sort of a credit cost you are assuming in 24?
Maximum of 25 crores. See, this is what we are planning. A maximum of 25 crores of credit cost in 23-24. Okay. We would like to continue it still lesser. Hopefully, if slippages are maintained, we will be able to continue. But we plan to have a maximum of 25 crores credit cost.
In 24?
24, yeah.
Got it. Okay. Got it, sir. Okay. That's it from my side, sir. Thank you.
Thank you. The next question is from the line of Paras Pandit from Nirmal Bang. Please go ahead.
Yeah. Hi, good afternoon, sir.
Uh-huh.
I was checking through the presentation. I could not find the borrowing profile given this time. So if you could shed some light on the split between the banks and
Yeah, I'm sorry. Actually, we only removed because the presentation happened to be a bit lengthy. That's why we slightly removed. Anyhow, I will tell you, see, the borrowing remained more or less same. That is why we thought that we need not do. But I will tell you the issue is, See, we had 9,688 crores of borrowings in the previous quarter. Now it has previous year. Now it has moved to 9,914 crores. In that, the borrowing from NHB has come down by around 500 crores, from around 2,000 crores in 22 to around 1,500 crores in 23. But that has been offset by an increase in borrowings from banks from around 6,600 crores to 7,300 crores. And our borrowing from our parent Repco bank remained more or less stable at around 1,100 crores. So net from 9,700 crores approximately to 9,900 crores borrowings in FY23, which means a 200 crores increase in borrowings. I'm sorry that we have omitted. It was only because we found that the presentation was becoming a bit lengthy. Anyway, we will see to it that from next presentation onwards, these particular numbers are included. Sorry for that.
Could you also provide the incremental cost of borrowing?
1 minute.
Weighted average cost is 8.1.
Weighted average cost, that is incremental is 8.1.
8.1. And segment-wise, that would be?
Segment-wise, I do not have immediately. I will. Okay.
All right.
Segment-wise, housing loan and HE, you are saying, right?
Yeah.
Yeah. So my cumulative borrowing cost is at 1 minute. 1 minute. Cumulative average.
Yes,
sir. Hello? My
Yeah.
cumulative borrowing cost is at 8.08 as of March 23.
All right.
Okay.
I will.
7%, as against 7% in March 22. So 1% increase is there.
Yeah. So I was asking this
We
split.
have passed on more than that.
Okay. All right. Thank you so much, sir.
From 8.15, our borrowing, our lending cost has gone up to 9.6 as of March 31.
Okay. All right, sir. Thank you so much.
Thank you. Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line. The next question is from the line of Himanshu Taluja from Aditya Birla Sun Life AMC. Please go ahead.
Hi, sir. Thanks for the opportunity. Just few questions at my end. Firstly, when you're giving a disbursement guidance of 20%, if you can also talk about qualitatively that under the new LOS software, how you are seeing have you started seeing the normalized trend in terms of the disbursement in the month of April and May? Secondly, in terms of the mixed composition, given we have made last year a lot more cleanup on the asset quality, now we are comfortable on our credit cost as well for going ahead. What should be the mix between the portfolio between a home loan and a LAP? How you expect? Do you expect any change in this?
Okay. This software has been implemented only from February, so some stabilization is going on. But definitely, this new software is going to be an enabler in making us reach 20%. That is for sure. Because it has got added features, it has got to give simplicity.
Sir, sorry, your voice is breaking. Sorry, your voice sort of.
Am I okay?
Yeah.
Okay.
Yeah.
This new software is going to be a definite enabler in increasing our disbursement. That is for sure. And I can tell you that in the 2 months or 3 months of implementation in the branches, this has been accepted well by our field. And what we have now done is only a basic version. There are so many add-on features that is going to be there, including mobile lending and all. So going forward, all these things will help us in improving our disbursement. That is for sure. Second, as far as home loan and we don't want to call as a LAP. We would like to call it as home equity because it also includes some of the commercial and other products in this. So this home loan equity portion will remain more or less at 50-50.
Okay, sure. The second question is around your asset quality. If you can just talk about your restructured book, what is the outstanding, how much provision coverage you are holding, and where is this breakup of this restructured book sitting on between a stage 2 and a stage 3, and how much you expect to any adverse outcome in your restructured book?
See, as far as restructured book is concerned, I can tell you the worst is over. See, we had around 700 crores of book, restructured book during the year, hitting us during the year. Out of it, around 200 crores has already slipped. And around 100 crores.
Sorry, 200 crores.
Regular. Hello? Am I audible?
Yeah.
So the remaining, out of remaining 400 crores, out of 150 or approximately 150 to 200 crores is in stage 2. This, even though it is in stage 2, we are seeing some acceleration in repayments. So while I am not ruling out some slippages from this restructured book, we do not feel that there is going to be a big hit because of restructured book in the current year. I do admit that this is going to be an issue in the current year. If at all there are going to be slippages in the current year, this restructured book will be an issue, but we don't foresee any big hit because of restructured book. Because in our view, the worst is over as far as restructured book is concerned. Even all these stage 2 accounts, we are seeing repayment. Only thing is they are paying every month with some lag. We would like to see that some acceleration happens in such restructured books. Hopefully, over this current year, this restructured book will also become normal.
Okay, sure. Sir, in your credit cost guidance for FY24, you are considering the movement of your restructured book, some clip of the restructured book in your estimate?
Yeah, but see, please also understand that we will be having some recoveries. To that extent, there will be a saving in provision. So the additional credit card that we may require because of the slippages is likely to be offset by the recoveries that we may make from our core NPA portfolio.
Sure. And sir, just my last.
We plan to have additional 35 crores.
Okay, sure. Then sir, just my last few questions. On this, on the slide 13, your margins have improved by 40 bps during the quarter. The spreads is compressed by 20 bps. Can you just some clarification how triggered this? Basically, how this triggered this?
I'm unable to get you. Actually, the margins have increased. There is no second opinion that the margins have increased quarter on quarter.
Okay.
Because of our increasing MLR, that is a minimum lending rate that we charge our customers, the margins are increasing quarter on quarter.
Okay.
But I could not get you the question on the...
Sir, my question is, when the MLR has increased, as you mentioned, your margins have improved. Why there is a spread compression of 20 bps during the quarter?
Because there may be an increase in cost. Please understand. See, there may be an increase in borrowing cost during the quarter, but we would not have passed on that particular increase to all the customers. The MLR increase has happened only for the new customers. The resetting is happening only once in 6 months. So during January to March, only those accounts which fell for a reset only would have got the increased interest rate. That is why I said in the initial remarks that going forward, since we are going to have the reset every quarter instead of every 6 months, this passing on of this interest cost, any cost increases from our borrowings will definitely happen at a faster pace from the current quarter onwards.
Okay, sure. Thank you, sir. Thanks a lot.
Thanks.
Thank you. The next question is from the line of Sushil Choksey from Indus Equity Advisors. Please go ahead.
Congratulations to the team Repco for a stable number and best wishes for all the growth. So my first question is average ticket, which is approximately 12 lakh rupees. With the housing prices and land prices on upswing, geography where we have strength. Do you see that average ticket size growing?
See, the average, thanks Sushil for coming to the conference. See, the average ticket size as 12 lakhs is for the entire book. But actually, if you see only the ticket size for the current year, that is 23, the average ticket size is 17.8 lakhs. This is as against 15.33 lakhs in the previous year, which means the average ticket size is in fact going up. But when we see full 1,05,000 accounts, the average ticket size remains at 12.
But do you see that further going up or stable around 17, 18 lakhs?
Yeah, it is going up. It is going up.
Second thing, sir, in competition where the growth is visible between 30 to 40%, and I'm sure your digital and software spend will be stabilizing in this quarter. So, if so, is the aspiration internally for growth higher?
I would not like to spill the secrets, Mr. Sushil. Let me be very clear. I want to be very conservative when I am talking to people like you. Okay,
No,
that is why
conservative is fine, sir, but is organization geared up if there is demand at your existing offices and remote locations where you have spoken hub or whatever? If the demand is higher than your origination capability needs support, that's what my question is more or less.
Yeah, definitely. We are seeing some momentum, and we are trying to fill any gap, whether it is in human resources or in technology or in any other requirements. Wherever such gaps we are finding, we are trying to fill up immediately. And definitely we are confident that we will be able to even surpass our own estimates.
So does it mean that your current staff strength is capable of handling much bigger and larger volume than what you are processing today?
Maybe, if at all there is requirement, current staff requirement is enough, especially in some pockets. Maybe in some geographies we may require more people, especially where we are not all that popular. We are finding it slightly difficult to get people, and some attrition is also happening in such geographies. So going forward, maybe we may have to tweak our HR policies so that we get the best talent in these geographies as well. But as of now, in our main southern markets, especially in Tamil Nadu, I think our staff strength is high.
Where do you see your cost to income?
Cost to income should go down. It's slightly on the higher side. And that can be offset by productivity, improving productivity. That is our expectation.
Last 5 years average is around 20-21%.
Yeah, I understand. Maybe, please understand, in the last year, we had added approximately around 200 people, including some trainees and all we have added. So that is one of the reasons why our cost to income ratio went up. And there was also cost due to this technology change. These things may continue also. See, for example, this year we are planning to have some staff cost increases because of the salary revision and all to be given to our employees because it is long overdue. But all these things may be an initial cost, but going forward, this will be more than offset by an increasing revenue in the coming quarter. That much we are confident.
Any view on the parent companies holding in Repco Home Finance?
They are already having 37%. I don't think there will be any change in that.
No, but they are in need of capital. That's what I hear.
Repco Bank is in need of capital.
Yeah.
I'm not aware, sir.
You're not aware. Never mind. Thanks a lot and all the best, sir.
Thanks, Sushil.
Thank you.
Thank you. The next question is from the line of Praveen Kumar from Equitas Capital Advisors. Please go ahead.
Yeah, hi. Thanks for the opportunity. I was looking at your region-wise loan book disclosure that you have provided in the presentation. So there I was noticing that, on a YOY basis, you have degrown in Gujarat and Kerala, and there has been marginal growth in Maharashtra. So what I wanted to understand is that, is this largely, hello? Am I audible? Yeah. What I wanted to understand is that, is this largely driven by competitive intensity in these regions, or is it driven by any adverse asset quality experience that you might have had and you decided to go slow? So could you throw some light on that?
Thank you very much. Specific to that particular market. Maybe Gujarat, what you are saying is right. Maybe we have slightly degrown in that particular region during last year, but we have taken steps. We have changed some people there and all that. We are confident in 23-24, Gujarat also will be contributor. As far as Kerala is concerned, I would like to mention that in previous 2 years, we had degrown in a large manner in Kerala. In fact, we did not grow at all in Kerala. We even stopped disbursements. But now we have started disbursements in Kerala. This has happened. Pune, that is the Maharashtra region, is turning around. We will see good improvement in 23-24 as far as Maharashtra is concerned. Gujarat was a challenge last year. Gujarat will turn around this year. And we are trying to open more branches in our Ahmedabad region. Ahmedabad region consists of Gujarat, Rajasthan, as well as Madhya Pradesh.
So when you say it was a challenge, you mean from a competitive intensity perspective or from an asset quality perspective?
No. One is competition. Second one is our brand. See, our brand in Gujarat is not as popular as in Tamil Nadu. So that was a challenge in Gujarat. And there were some issues related to staff, some attrition and all in that particular locality. These are getting addressed.
So do you, when you guide for a 12% kind of AUM growth in FY22, these 2-3 states which you spoke of, they should go on par with the book, or they will still be a drag as far as growing lower than the overall growth?
No, actually we expect Gujarat and Maharashtra to contribute better. And not only that, these areas we are making new. So whatever disbursement is going to happen in these particular areas is lagging to improve our area compared to the same type of disbursement in our Tamil Nadu area. Because these are all new places for us. There will not be much repayment. So our AUM growth will be better in these geographies.
Okay. Thanks for the clarification.
Thanks, sir.
Thank you. The next question is from the line of Kunal Shah from Citi. Please go ahead.
Yeah. Hi. So firstly, in terms of the balance transfer number for FY23, you mentioned it was 367 crores. How much was that for full year FY23?
BT out.
BT out.
Yeah.
So BT out was 367 crores, which is almost like 3% of the opening AUM.
Okay.
No, so I'm just checking. Was that right? Is that the right number?
Yeah. I got it from our people. Yeah, 360.
Oh, okay. So it was just 3% for annually for entire FY23. And so when we have maybe highlighting in terms of almost like 12% AUM growth, 20% disbursement growth, that is suggesting almost like 16% kind of a rundown, which would be just the normal repayment. I think there maybe then we are highlighting that this entire BT out will be almost zero kind of a number, because this year it was slightly on a higher side. But so is that in the assumption that maybe on the BT out side there won't be much which will be there and there will be a complete delta available?
The BT out will be matched by a BT in or an increase in BT in. So net there will be an increase. So if you see only BT out, yes, what you are saying is right. But we are also expecting an increase in the BTs. So net, there will be an increase. This is our expectation.
Okay. And secondly, sorry if I am missed on the stage 2 number when you are highlighting to Himanshu's question on restructuring. So what is the stage 2 at this point in time? And if I have to look at it, stage 1 plus stage 2, we have provisioning of almost 1.3 odd%. So if you can just highlight in terms of how much we are carrying as a provisioning on stage 1 and how much is the provisioning on stage 2.
1 minute. I think it is 0.5%. 1 minute. Yeah. See, stage 1 provisioning is 0.5%. Stage 2 provisioning is 6.5%. And stage 3 is 40%.
And what is the, yeah, stage 2 is clear. And what is the proportion in stage 2?
Stage 2 is around 10%. 13%
around?
Approximately.
Sorry?
Approximately 13%. But let me be very clear. Let us get the exact MIS. Maybe going forward, we will be able to give you even the breakup of stage 1 and stage 2. As of now, we do not have the exact number, but it should be around 12 to 13%.
Yeah. So when we look at it, almost 12 to 13% of stage 2 and maybe somewhere around 5.8% of stage 3. So almost like 18, 19 odd percent, against which we have ECL provisions of 4 odd percent. And still we are guiding for 25 crores of credit costs. So does it seem like quite adequate at this point in time? Because maybe on the overall stress pool, the provisioning of 4.2 still seems to be slightly lower, yeah.
Yeah, we are confident on only one front, sir. We have now focused more on stage 2 and stage 2 as well as the current dues. We have created a separate collection vertical from April 23 onwards. So almost 66% or 66 people are exclusively or only on collection of current dues as well as stage 2 dues. These people are not handling the core NPA. So we are confident that we will be going below 10% as far as stage 2 numbers are concerned. You will see the numbers in the coming quarters. We will be able to give a breakup of stage 1, stage 2 in the coming quarters. That is the confidence that we are getting, and we are seeing better numbers in the first 2 months itself. This collection vertical is proving proving to be a game changer in my view, in the current year. So definitely the stage 2 shipping to stage 3 will more or less be reduced at the maximum in the current year. That is our expectation.
Okay. And then in terms of the quarterly volatility, what we see generally in Q1, there is an inch up since we would have rolled this out from April. Then should we see end to that trend as well, or that will still continue?
I don't get you, sir.
So generally in Q1 and Q3, we see the inch up, which is there in the stage 3, and that is largely the flow through from stage 2, which happens, okay, particularly in Q1 and Q3, and that has been historically the trend for Repco. So now, given that you are saying that we are putting the collection team from April more focused on stage 2, then should we assume like a more consistent behavior across the quarters, or maybe that quarterly volatility can still continue?
That is our expectation, sir. We want the NPA numbers to come down sequentially quarter on quarter. We are confident. Even if there is any slippage, it may be a small number. It may not be a big hit. That is our expectation.
Okay. Yeah. Thanks and all the best. Yeah.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Rahul Jain from Credence Wealth. Please go ahead.
Thanks for the opportunity. Am I audible?
Yeah.
Sure. So congratulations on the good numbers. And the BT in of 200 crores you mentioned, that was really good. And just to understand, has the momentum, so last entire year this amount is at around 200 crores. Have you seen the momentum of being increasing in last 6 months or last 2-3 months, 4 months? How do we see that?
Yeah, in the last 2 quarters, I do not have the exact number of month on month, but in the last 2 quarters, we are seeing a momentum as far as BT is concerned.
And that is primarily due to the competitive interest rates which we have been able, you said we are providing the lowest interest rate. So just to understand what has helped us in terms of this, and is the momentum continuing?
That is the primary reason, Rahul. I will not say we are the lowest. We are one of the lowest in the industry. That is the primary reason.
Sure, but given the industry is competitive and typically everyone looks forward to growth, so what exactly are the reasons for our success on this side? And is it?
I am unable to give a specific reason, Mr. Rahul, but the only thing is maybe because we are now focused on disbursements, we are each and every file getting focused. Maybe the customers are having a feel that things are changing in RHFL. Maybe because we are attacking track in all such logins. Maybe because of all these reasons, customers get a feel that things are turning for the better in RHFL. That could be one of the reasons.
So with regards to BT, are we targeting certain markets or certain kind of players where we feel the vulnerability among the customer is higher, where we can easily get them to our side? Is that how we are trying to strategize that?
Oh, we do not have a specific strategy, but most of the BT ins are mostly from the south markets, where we are already popular and where we have DSAs also in parallel. So these people are able to convince the customers from other housing companies perhaps. But as you say, but we do not have a specific strategy of targeting a particular geography or a particular lender.
Sure. And when we spoke about 12% AUM growth, 20% sanctions and disbursement growth, so typically, are we trying to get more market share? And if so, how are we doing it specifically? Is it like one you mentioned about opening up of new branches, Gujarat area being now the focus area? How?
That is the main thing. Second one is follow-up. Micro level follow-up that is being done. I think that is going to help us in improving our disbursements. Compared to the previous thing, now we have started following up on a file-wise from our head office. Second. Third one is our track. Because of our decirculation that we have done, that has proved to be a game changer. So many new files are getting sanctioned, even at the lower level. So that has helped us to improve the numbers. And the simplification of processes. More importantly, the new platform will definitely help us in improving our performance.
Sure. And the current 2 months, the 2 months of the current year, do we see that kind of momentum, or that momentum is much better than what you are guiding for?
I don't want to give you a number, but I am seeing some definite improvement compared to quarter previous year on year. Sorry.
And this is across your growth sanction disbursement and also the BT ins and the BT outs.
Yeah, across geographies, net to net. I don't have exact number of BT outs or BT ins in the last 2 months, but across geographies, we are seeing a better performance in disbursements compared to year on year.
Sure, sir. Thank you so much, and wish you all the best.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Avril Jain from Singular Guff. Please go ahead.
Just quickly wanted to understand, if I were to look at the whole of FY23 versus FY22, the net interest income has gone down, whereas the yield, there was only a very slight compression in yield. So was it that the AUM build-up happened towards the latter half of FY23?
Yeah, primarily that is the main reason. But there are some other factors as well. Primary reason, as you say, it is because the disbursement or the increase in the AUM happened in the later half. But some of the issues are related to the previous year. See, we found that there are some previous year issues related to processing fees also. That was one of the reasons. Second one is some accounts we started providing 100%. So that such accounts, some old accounts in NPAs, we have started providing 100%. In those accounts, we had to reverse whatever the interest income that we have done. So these are all some of the main reasons. Third one is on PMIOI. See, all these subsidies that have come. In such cases, the processing fees we have to reverse. So these are all the things. More importantly, penalty income. See, penal income, because of our efficiency, penal income has reduced. So the other interest income, other than loan-related income, that has come down. And then deposit, nearly some 400 crores of deposits with the banks. That has now come down to 153 crores. So multiple factors because of all these reasons, but mostly pertaining to the previous year's issues. Otherwise, our income should have gone up at least by 15 to 20 crores year on year.
So would it be fair to say that your Q4 effective yield on the book is the right way to look at the book going forward, which would mean that there would be a very strong NIM growth?
That is precisely the point I was about to come. Yes, if you see Q3 to Q4, you would have seen a definite increase in the net interest income as well as interest income vis-a-vis the previous quarter. So this will be maintained in the coming quarters as well. Because of a blip, I should say, the first quarter of 22-23, there were issues, and because of some bulk vouching in the previous year. These are the reasons why our interest income remained more or less stable year on year, if you take the whole year into consideration. But going forward, I think quarter on quarter, there will be an improvement, more so because we are repricing our book quarterly, and we keep on increasing our MLR. See, between April 22 to March 23, we have increased our minimum lending rate from 8.15% to 9.6%, which means 1.45%, that is an increase, even though cost increased only by 1%.
Okay. And since you are disbursing more, the processing income increase will take care of the penal interest income.
Hopefully, but the processing income, I think you may be aware that in India, we have to spread it over the entire life of the asset. So whatever processing income, I cannot vouch. But if we can do some other products, related products like insurance and all, that may help us. That we will take care. That other income will help us.
I'm sorry, in last year you had to reverse some of the processing income because it had to it has to be amortized over the life of the loan, right?
In 21-22, we booked a large portion of our processing fee income because the previous years, from 2017 onwards, we have started vouching under India. So in 2021-22, the company reversed all the processing fee income of the previous years. 3 or 4 years, a bulk reversal happened during 2021-22. That advantage we did not get in 22-23. That was one of the reasons why our total interest income was more or less flat year on year.
Okay. But that would have depressed the number in FY22, not increased it, sir. I think I'm not able to follow you.
The point is, your point was why our total income remains the same, even though there is an increase in AUM, right?
Yes.
Yeah. So the issues are, that's what I think. There are multiple factors which contributed to this stable interest income, total income, interest income in 22-23 vis-a-vis 21-22. One such reason is this PF poaching that I was telling you. Second one is because we transferred many accounts from stage 3 to 100% provision provided accounts. So we have to reverse. That was in 22-23. So we have to reverse much of the interest income that we had booked in those accounts. Around 23 crores of principal we reversed. Third one is on the, as I was saying, the processing fee. And in case of bulk receipt of subsidies, again, there too we have to reverse processing fees in PMA accounts. Like this, there are so many factors which led to more or less stable interest income in 22-23 vis-a-vis 21-22.
Okay. And what was the amount, quantum of the incentives that you received from the government for this?
Total of 84 crores. Total of 84 crores we have so far received. And 51 crores was received in the last quarter itself. Out of this 84 crores, 51 crores we got it in the last quarter. Despite that, we have increased our AUM.
So this directly gets knocked off from the AUM and you have to reverse the processing fee on this amount.
Yes.
But does it get credited back to the customer, the processing fee of this 51 crores as in for an individual loan? It gets knocked off from the principal outstanding? The processing fee part?
Yes.
Okay. Got it. Thank you so much, sir.
Thank you. The next question is from the line of Rajiv Mehta from Yes Securities. Please go ahead, sir.
Just 2-3 questions. Sir, firstly, when you talk about disbursement growth of 20-odd%, would portfolio buyout and BTN be outside of this?
No. No, Rajiv.
They are a part of it.
Yeah, I don't want to give such guesses. Yeah, everything put together.
Okay. And this portfolio buyout, which we have done this year also, would that be a recurring, strategy that we would follow?
No, I don't want to call it as a strategy. We will take it as and when suppose we get a good portfolio at a better price and all we will take. And we do not want to do only that. See, that supplement our normal growth. That can be a main thing. And we don't go behind this portfolio buyers.
Got it. So we always keep looking out, provided it suits our profile. Yeah. And sir, in terms of the rate transmission that you did when you increased your MLR from 8.15 to 9.5 today, what percentage of customers you have to increase EMI and by what extent?
See, we have around 1,05,000 customers. Netting NPS, we have around 1 lakh customers. Almost all the customers, maybe barring some thousands, almost all the customers get repriced every quarter now.
Yeah. No, I'm talking about how this rate transmission was effected. Was it just the entire? Was it all through tenor extension, or did you also have to increase the EMI?
No, invariably we keep the EMI same. We only lengthen the repayment period. Invariably, but in some cases where it has already reached the maximum, maybe we may have to change the EMI after informing the customer.
Yeah, so that is the question. That is what number of cases and what percentage of portfolio?
I don't have immediately in my strategy. Maybe I may have with you. Maybe, but that will be a very small percentage. Most of the customers we will be able to accommodate by lengthening the repayment schedule.
Yeah. And sir, again, just coming on stage 2 asset, because stage 2 loan book or portfolio, it's a sizable, feature for us. So if I remove the already restructured piece, still we would have 1,500 odd crore, 1,600 odd crore of normal stage 2 asset. Are these accounts, what is the collection on these kind of accounts? Are they paying regularly, and does the risk of slippage is not significant?
The risk is not significant. You see, had that been significant, how our GNPs would have come down, please understand. That too, when we did not have a specific collection vertical last year. Now that we have a specific collection vertical, I am seeing a real change in the stage 2 numbers in the last 2 months. We are confident that going forward, the stage 2 numbers will be very much manageable and on par with the industry.
Okay. And hence you would be okay with not increasing coverage because you believe that the stage 2 pool itself will come down?
Definitely. Stage numbers will come down. That is for sure.
And we are not looking at raising coverage at this point in time?
It may not be required. If required, we will add that, but it may not be required.
Got it, sir. Thank you for answering my questions. Back to you, Jacob.
Thank you. That was the last question. I now hand the conference over to the management for closing comments.
I once again thank all the participants who took time off to attend this call. On behalf of the entire management of RHFL, I'd like to assure that this company is on the growth path, and we are confident that 23-24 will be a real turnaround year for this company. I will seek your continued support for this organization in the coming quarters. Thank you. Thank you very much.
Thank you. On behalf of Yes Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.